Welcome everybody. Welcome to today's video log for 14th Feb and potential auction paths. Myself Dean. You can get in touch with me on Twitter or you can visit my website getthattradingedge.in. Software used for today's presentation are market profile and bell order flow. For more details of the software, you can visit belltpo.com. Let me read the disclaimer. Information shared here is not a trading recommendation and we are not in the business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. Will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decisions. There were 2-3 questions today, but since I'm not able to record this on my system where my softwares are installed. I have to do it on a separate system because of some sound issues. So I have we cannot look at these examples on the live charts. We'll have to make do with the screenshots. So I'll try to answer these questions at my best. But if I cannot answer them properly today, then as soon as the sound issue is resolved, I'll make another recording for that. So before that, let's just go through today's market action. We have a nice balance profile, an inside day. This is a 2-day composite, but we are still inside this yesterday's range. If we compare today's value area with yesterday's composite, then it is an inside value also. So market was completely in balance today. Whenever it probed towards the edges, you can see this nice gradation forming at the edges, suggesting that there was no interest at the edges of the profile, and most of the activity was concentrated in the center of the profile. So it was a nice balanced day. Nothing was happening, and just continued the status quo from last 2 days. We are moving sideways, and today also we did the same. So there was no clear attempted direction. The volume was on the lower side, an inside value, and this nice bell-shaped curve all point towards a balanced kind of a day where both buyers and sellers were matching each other. Uh, this is the kind of activity where you can say that only day time frame traders were active because the volume was low. Just because the shape is a bell curve and profile is square does not mean that other time frame traders are not trying to accumulate or distribute their positions. But since the volume was low, I mean, we can say that participation from the smart money was on the lower side. You can see for quite some days now, since we cannot split these profiles, you can see that for quite some days this is the range where the closes are getting clustered. We have one here, one here. Let me just draw. One is here, one is here. Of course, this is a composite profile, so this is the close of the second day of the composite. Here also the same, the second day closed here. Today again we closed bang inside that 0510 range zone. So I mean the closes are getting clustered in this particular range, and that means again that there is some unfinished business still there, unless and until we close away from this particular level, we won't be able to put the inventory which is getting accumulated in this range under pressure, either on the upside or the downside. So that will be a bit difficult. What else do we have? One observation I could make was we had this low which was a weak low as we had discussed previously. Then this 2-day composite has a higher low. Today also we have a higher low. Now if you can split this profile, you will see that we made an early attempt to move down. So we had that first attempt, then we moved down pretty not very swiftly, just rotated down. That was the second attempt. And then during the close, there were a couple of attempts to mark the prices down. This would be evident on a split profile. So basically, there were 2-3 attempts by the bears to mark the prices down, but they could not manage even overlapping to lower value. It was an inside value. What goes in favor of bears, or what takes away the day from the bulls, is the position of the close. Close was bang in the middle of the profile, right close to this point of control, fairest price. So I mean, this particular close won't put anybody under pressure. There was a chance of closing near the highs, but then in the late L and M period, the prices just drifted back and closed in this range. So I mean, we were hoping to put sellers from this area under pressure by finding acceptance here. But the problem is that we are finding acceptance now. This is the third day. This is too much time. Too much time means that if these sellers had to be put under pressure, we should have absorbed here for one day and then immediately started to move higher. But this is taking too much time in this range, and too much time may actually we may say that we are accepting at higher levels, but since this is spending too much time here, this acceptance might actually lead to a rejection. Now, does this happen exactly tomorrow or not? That remains to be seen, and how it happens also remains to be seen. There is a possibility that we may flush out everybody who is trying to sell in this range and then fall, or maybe form a gradual lower move and closing at this extreme, which will then put everybody who had bought in this range under pressure. So there are 2-3 ways this particular thing may happen, and as and when it will be developing, we'll get some idea beforehand, and that I'll definitely share with you. So I mean, this is what I feel. Not much action today, and on such days it is not fruitful to push the market or push your hand in trying to trade the markets. Better to have an off day and just concentrate on other factors of your trading. So that is in brief. Since we don't have this, we cannot split and all, this is just an image. I'm a bit feeling a bit tied up trying to explain this, but we already know that this is an important reference. This anomaly here is repaired already, so on this day. And on the upside, of course, we have this zone. Again, we could not go in that zone, or just went and came back twice. We found some rejection over there, but this particular thing is uh, catching my attention, is these formation of higher lows. The higher lows are forming categorically. You can see that there is very little interest, because there is this gradation is there. Here again we have this. Of course, we have everything at the top also, but since we have these kind of a clustered highs in this range, and now slowly the lows are getting higher and higher, it means that buyers are pushing a bit. But again, the conflicting information does not end here. We also have this too much time going on. So my earlier stance of either repairing this anomaly and then moving higher, we repaired it, but we could not move higher. So maybe market needs to know what is below this excuse me, this weak low, and then only it might be able to move, or come down gradually, come down, just drift down, close in this particular area, very close to this low, and then put every buyer in this range under pressure, make them anxious going into the close, and next day just gap down and start moving low. That is also a possibility. So not much to discuss in terms of hypos. Of course, I mean, that balance area trading rule applies. It's pretty clear that we have this particular range to look for shorts, and I mean, if it comes lower in this range, then I would prefer that it tags this particular area. But if it does not, then we have this 3-day balance, and at the edges of this 3-day balance, we might look to initiate longs. If we see exhaustion or signs of weak strength in this region, then we may fade this down move for the test of this POC. Like if we come here, see some sign of strength, go back and test this POC, move higher, find rejection, again come back and test this POC. So what we need is, for a breakout or breakdown, is acceptance in this region for a breakout, and acceptance in this region for a breakdown, and further acceptance below this weak low for a down move. If we just move below and fail, then I think we'll move higher and take these highs out. So that is what I feel may happen in coming days. Okay, so there were a couple of questions. Yes. SAK is asking about information on island profiles. That I cannot do today because of this particular issue. I need to show this on my system with a little bit of past data. We need to get behind, get into the past, get into the history to find those examples. I don't have it on current market. Morning and evening starts on candlestick chart I can explain. HV and LV also I can explain. So let's look at these two questions. SAC, I'll take up your questions soon. Please bear with me today. Okay, this is the daily bar chart, and I'd like to show you morning and evening star. This is an example of an evening star. This is an example of an evening star. This whole development looks like an evening star. These are the evening stars which did well. Again, you can see here. What I mean, I am not a very a big fan of these patterns, but whatever I know about it is that if you have a gap up, narrow range day, and then gap down, then the area left behind is an evening star. So here we have a clear evening star. This also was a good example. But if you look at this kind of a development, you will see many places where this occurs and there is no follow through. One area especially stands out is this one. This one is very good example. You get a down follow through, but then nothing, again we go back up. This was a promising evening star but did not materialize. Now I don't have a morning star here. This might be considered a morning star. So basically what is happening in market profile terminology, if I have to talk about it, what I can say is that this day gapped up higher, traded in a small range, and on next day we reject this particular range altogether. Never try to go inside it, nothing, just plainly reject it. And when this happens, we have a sort of a balance which has been rejected, and that is a sign that when the market was trying to move higher in during this particular move here and here, finally the sellers have matched the buyers in this particular bar. If you look at the profile for this day, it should be a nice squat profile. So that is what may have happened here. And when we leave this profile, it means that smart money has accumulated their shorts in this range. Other time frame have arrived and they have left this range, and generally leads to a nice down move. But we need to confirm that on profile. It does not happen always that we get this kind of a move. Again, if like this move which I am showing, if the profile turns out to be a B, excuse me, then again it's really difficult. I mean, this B suggests that smart money is accumulating, so we might rotate back to this point of control. So this is something which happened here, that it broke down, but again it retraced the whole move. So island reversals, basically leaving an area of price action altogether, considered as a nice rejection. But fortunately, we don't have to rely on only these island patterns. What we can do is just dive into the profile charts and look whether the profile supports this particular rejection or not. If it is not B, if it is not B, like this is okay, this is a nice profile and we leave, and it's not a B, it's a nice elongated move, then there is every chance that the move might continue. Or it may also happen that we leave, form a B, move higher, but when we reach this point of control, we find again sellers defending this level. That also is a possibility that now this move may continue down. This is exactly what may have happened on this particular area. We have a evening star, we left it, this profile, there is a good chance that it was a B. The second one was an inside day, third also was an inside day. Then we try to move higher, try to enter the range of this particular day but get rejected. So this is the kind of action which happened here for 4 days, and then we got a nice rejection down. So island days, I mean, what I can do is I can just keep an eye out on island days, or whenever you find an island day, please share it with me so that I can explain how the profile is behaving on those island days. Let me just go back and check the next question. Okay, HVN and LVN. So Nakul, I think that is my answer to your evening stars and morning stars. Morning star, unfortunately, I don't have an example right now. But you spot a morning and evening star for me, and I'll look into the profile details and tell you exactly how to interpret that, whether to rely on it or not. Moving on. Next question is on HVN and LVN, high volume nodes and low volume nodes. Let me just first tell you what is a high volume node and low volume node. This is an HVN. This is an HVN. Here is an HVN. This is not marked, but it is an HVN. Again, we have a high volume node. Again, we have a high volume node. So whenever there is a thick part of the volume profile protruding out, it is a high volume node. This is a high volume node. This is a high volume node. Generally, the volume point of control is the thickest part, and that is the highest volume node you have. Low volume node is the converse of it. Valleys, wherever you see, is a low volume node. So here is a low volume node. Here is a low volume node. I mean, again, here is a low volume node. So now that you know what a high volume and low volume node is, let me, I have this software, Bell Market Profile, can plot high and low volume nodes for you automatically. Just have to make some settings, that's all. Select some options, very easy. And that high volume and low volume node will immediately start displaying. So red lines are low volume nodes, blue lines are high volume nodes. Now how I use it is more important. And if you have seen my order flow presentation or the fourth part of the 4-part webinar series, which is available for free on Bell TPO website, excuse me, you might have seen me talking about that smart money taking time to accumulate their positions, and that is exactly what happens on high volume nodes. Whenever there is heavy volume getting traded at a price level, smart money is active there. Usually people say this is a sign of day time frame activity, but if you observe the profiles on extended period of time, you will find that these kind of high volume areas are the areas where smart money will accumulate their positions or distribute their positions, because they need time. Like if a big player comes in and immediately sells 10,000 lots of Nifty, and the Nifty will go haywire because of that. So he cannot do that. He have to sell it for a long period of time in short amounts, 100 lots, 50 lots, 40 lots, and then accumulate his whole short or long position. And that can happen only in this thick portion if he goes about his business silently and in small quantities. So what I feel is that it is the high volume nodes where the smart money is likely to defend their positions. What do I mean by that? Now this is a high volume node. When the price came down here, smart money defended it and sent it back up. Again it came down to test, again it was sent back up. So this is how smart money behaves around high volume nodes. Again you come you come to this day, you see that this was a high volume node, and lot of times price tried to come in this range. Every time it was rejected, and you can see what happened the next day, that we close right at near the highs, putting everybody in this region under pressure. I had mentioned this, and the next day you get a nice gap. Now we did not get much follow through on that day, that is a different story, but at least we got a nice move because of this accumulation. Now this particular smart money which defended this high volume node, they got out of their position in this area. Now this high volume node becomes supply, because then we move open lower. We should have seen a nice elongated profile on this day, but we did not get that. We got a roughly p-shaped profile. What happens on the next day? Again, it's evident. You try to come into this high volume node, you find supply, because smart money either got out of their positions or accumulated some shorts here. So this is how high volume and low volume nodes behave. Again, you see prices came down here. This was the high volume node. This high volume node already defended, a new high volume node created, buyers gapping up the price. When the prices came down in that region, again you see buyer interest. Now combine that with Q structure, and you have a nice pattern on your hand to trade, fade this particular move. You could have shorted here, covered, because there was another high volume node. So that is how I trade using high volume nodes. Low volume node I am not a big fan of. Usually low volume nodes means that the market did not trade there for enough time, and when there is not enough time, smart money is not involved, is rarely involved when there is not enough time. And what it means is that if smart money is not involved, I mean, sometimes it happens that on price profile, if you look at this particular area, this is a low volume area, and it offered some support. But usually what happens is that whenever these areas give up, then the move is very rapid. And I mean, sharp moves usually happen when such kind of single prints give up. And I do not use it in my trading. I would rather use this high volume node and you know trade a zone around it, instead of exactly trying to put your positions on low volume areas. So I'm not a big fan of LVNs. LVN means that there was less volume traded there. It means that that price was rejected, and uh, smart money rarely is present in that area. So that is how I trade HVN, LVN. Sorry for today, cannot it's not to my satisfaction at all. But what can we do? Systems are systems, and they just go down when you don't want them. So I think we have covered it. So that is my video log for today. Hopefully by tomorrow everything should be running fine, and we'll be back to our old ways. So thank you for listening. See you tomorrow.